Hey everyone, just wanted to hop on the mic and explain a couple trades that I took today and some very important lessons about stop losses that I learned as well, which is awesome. So I hope you guys can learn with me. All right, well, let's get into the first trade. It was on ES or SPY. I took SPY puts actually. Um, and it would have worked out if I applied the lesson that I learned today. All right, so let's take a look at context. We opened the market. We were selling off from this 3-hour supply here that we see up here. And a huge thing that I noticed is that rallies were being sold into. So what I mean by that is, if you see that, we bounced off demand here, and what do you know? Buyers were weak. We hit this 5-minute supply perfectly, and we sold off back into demand. And we were below VWAP. We tried coming out, and we failed, and that's when I entered puts here. So you may be thinking, all right, well, why would you enter puts in a demand zone? Good question. I noticed that buyers weren't really present here. You can see that volume was kind of weak. We're kind of just not, buyers weren't making an effort here. We kind of just consolidating around. So I decided to enter at right around this 10-15 candle, this blue arrow that you see here. And it looked good. We had this nice upper wick here. And I put my stop loss right above, I think it was this candle. Yeah, it was this candle at 4685. And excuse me. Yeah, so that's where I put my stop loss, right above this candle. And well, is that a good stop loss? No. And I'll tell you why it's not a good stop loss, because why does that count as a stop loss? Like, what makes it so good to be a stop loss? Well, honestly, when I was asked that question, I had no good answer for that. It was kind of just an area that I was like, oh, well, this is the risk I'm willing to take, and this is how much I'm willing to lose. And that actually costed me big time, because my analysis was correct, as you can see. So I decided to take puts here, and I stopped out, or more like I got wicked out by one tick above this candle. By one tick, I got wicked out. As soon as price went above, I stopped out. Was that the proper stop loss? No. What I should have done was above 4685.5 and then wait for the reaction. We can see that we're below VWAP here. We're below VWAP, okay? And our stop loss should have been 46.85 or 4685.5. Now I would have been in the trade here. Now we're holding, just patience. I had a lot of patience. I'm already in this trade for about 40 minutes. A lot of patience. Oh, by the way, my target was this 2-hour cautious demand here. That was my target. So we're just cruising around here, and well, let's take a look at this candle. Well, same thing. It was one tick higher than this candle, but 468.5. That was the high. Now, just because we tick it to the penny, doesn't mean we have to stop out. Wait for the reaction, because look at this. Volume kind of came in. Sellers stepped in. Okay, now what? We're still below VWAP too, so that's another confirmation. Sellers are still in control. Buyers are really not showing any effort here. We're kind of forming this little bear flag as well. You can kind of see. I'll just draw it real quick. Well, that kind of, I don't know. It's pinning to the candles, but you get the idea. It's kind of like a bear flag here. So we're creating this bear flag. And yeah, so I should have been, that's why it's so important to have a stop loss that makes sense. A stop loss that would have made sense is 4685.5, because look at this. It's support here. Resistance becomes resistance here. Support here. Look at this. Even this. Even this. It's support and resistance here. You can even see from pre-market. Look at that. 46.85 area-ish. Not the best, but you can see that we kind of have support and resistance around that area right here. You can see it. If you just look to the left, it's all, it just makes sense. And what do you know? My analysis was correct. I'm out of the trade here at this orange arrow, but boom, we sold off for whatever reason. And contracts were up. I think it was about about 75% here. Would have left one runner on here just to see if we were, gonna go sell off even harder. But as soon as I saw us double bottom, then probably would have stopped out or something. And then right after that, I literally typed out to a friend. I said, all right, actually, this actually looks good for to a reversal to 4680. So I said, all right. On this candle, I'm going to enter. We had this long wick. We double bottomed. Couldn't go any lower. We're in demand. And it's, kind of creating demand here. So I said, all right, I'll enter right around 46.72. And with a stop loss below 46.69. And why 46.69? Well, that's the stop loss that makes sense for my risk to reward because that's below this kind of support and resistance. Sure, I could have gone a little bit deeper with 46.67, but that would have skewed it a little bit. So you could argue that sure, I was chasing just a little bit, 4 points to make, it still would have been a good RR, to be honest, with given the target. So, your stop could have been below 46.67, but I chose my stop below 46.69 just because we have support and resistance here, right down here. Yep, so we have support here. It has a nice little support level, and the target was 46.80. And why was it 46.80? Well, let's just take a look real quick. 46.80 because if you notice, we have support here, resistance here, 46.80. And what do you know? To the penny, we hit 46.80, and that would have been a beautiful, beautiful trade, and contracts were up extremely nicely. So applying that same trade, I didn't take this trade, by the way, just to be transparent, but I was literally watching it the entire time, and I'm still kicking myself. Why didn't I take this trade? It made perfect sense. We had a volume spike. The next trade I took, so I did take a trade on Disney. Same thing. Here I actually had a stop that made sense. It's just the trade didn't work out. But here's another good lesson. So I took Disney puts. Targeting 15833 because that was the previous low that I saw, and I was going to take it on the break of this trend line. So I saw, I would have liked to see volume come in a little bit heavier, and I think that's where my mistake was, maybe, but even then it was kind of still working out. So I took puts right as we broke below this trend line, anticipating the 4-hour DBD, anticipating, going down, targeting 158.33, and my stop was 159.3 or above this trend line, and it was a decent stop actually. I like this stop a lot. As you can see that we're kind of let's see where the support in, so we have support here and resistance here right about this 159 to 159.3 area. You can even see it over here a little bit clearer. So 159.3, 159.25 actually would have been the correct stop. So, or you could have been 159.5, which would have been, probably a better stop, just a little bit more risk on the table, which would have been fine. And what happens? Well, it would have stayed in the trade if your stop was 159.5, but going off of what I stopped out on, I stopped out right here, or like right about here. I should have re-entered as soon as I saw sellers still in control. So as soon as we broke below here, I could have taken the trade again. And what do you know? If I just took the trade again, or even here, this was a huge key level. I could have taken it down here. Anywhere I could have taken it. And what do you know? The target was hit at 158.33, and contracts were up about 35%. So a decent return. Just had to grind for it. It would have hit right about here, and so another good trade there that would have worked out if I just respected my stop loss, or I would have re-entered. So just because you get stopped out just means that you just didn't time it correctly, and you could always look for another entry. Now let's say Disney kind of just took off here, and Disney could have just gone up 160 area and gone up the rest of the day. Okay, oh well, that's fine. It's not always going to work out where you're going to get this re-entry, but this would have been a good re-entry. We kind of have increasing volume here. This would have been another great entry, targeting 70 cents to the downside, risking above 159 since it's a whole number, and we have, some kind of resistance here now. But you guys get the idea on that one. Analysis was correct on my end, just didn't really execute properly. Besides, I respected my plan. That was the best thing. I should have re-entered here. That's all it was. But take a note, I wouldn't even been in this trade if I respected my stop loss on ES, on the SPY trade earlier that we just saw. Final trade of the day I took was on Roblox that, that I thought I was pretty actually proud of. The only problem was we were lacking VVM, and that was a huge no-no, but honestly I was okay with it because of the amount of confirmations I had here. In my pre-market analysis, I had, this 1 hour demand looks really nice, which it is. It's actually working out, somewhat. We're still consolidating, but I noticed this, I noticed this wedge forming out of demand, and I was actually thinking, all right. And I entered right here on this candle, anticipating that we were going to bounce because we were getting pretty tight in this wedge here. You can clearly see it. I thought we were going to, explode out of this this little wedge to VWAP, and I would have been up actually pretty nicely and would have recovered all my losses. Fortunately, I didn't. That's not what happened. You can see that volume is just absolutely dead. So you can argue that, volume kind of killed this trade, sure. But we had, if you take a look, we have 1 hour demand, so we're bouncing out of that. That's one confirmation. Next confirmation here is we have another triangle pattern forming. That's another confirmation. We have, this lower wick, buying pressure, kind of coming in, volume not really showing for it. What else do we have? We had 30-minute demand here, price bouncing off of this. At the time, we had, another 30-minute demand here. And at the time, it looked like we were basing out for another 30-minute RBNR. So given all of those confirmations, it looked really, really good. It just unfortunately did not work out, and I stopped out at a reasonable stop loss. And I took those previous lessons and I stopped out in a reasonable place, which was below 105.6. And that was a good area because you can see that this 105.6 area is support and resistance level, or an intraday support and resistance level. And we kind of bounced here for a little bit, and we kind of, so wait, let's see. I stopped out right, where was it? Right here. Yeah. So I stopped out here, and that was good. It was like a 9% loss on the contracts, which was fine. So, this could still work out. Just it's a little less probable now since we're out of these patterns and it's not looking too hot. But it still could work out, and that's okay. I think this was actually a pretty good trade that I liked. Put, my risk on the table, and it could have worked out. It could have spiked, and everyone could be praising me right now, like, oh, that was a great trade. But, it didn't work out, and I'm okay with that. I'm totally okay with that because I know that one good trade, if this trade works out, I make back all my losses and then some. If this works out, because we have a premium spike, we're going to have a premium spike, 106.5 level targeting this VWAP, and it would have been a good day, and that's okay. Some days are like this. Just have to manage risk and keep on plugging away, and eventually, a trade will work out here or then. So I hope you guys learned something about stop losses today, and hope you guys just learned something in general. And let me know if you have any questions, and thank you so much for watching.